Welcome to the Explainer. Today, we're going to do something really cool. We're going to go inside the mind of a sophisticated AI trader as it faces one of those can't-miss opportunities. You know, the kind of moment that's basically designed to test the absolute limits of machine discipline versus raw human emotion. You know, this quote, and it's straight from the AI system itself, it just hits the nail on the head, right? It perfectly frames the central conflict for any trader, that internal battle between sticking to your rules and that gut-wrenching fear of missing out. This is the exact problem this machine was built to solve.
So let's set the scene for this case study. The date is a hypothetical August 25th, 2025, and the star of our show is a stock that looked like it was about to make a lot of people very, very rich.
Okay, so here's the setup. Tesla stock is absolutely on fire. The chart looks like it's coiled for a massive breakout, just ripping from $340 to over $346 a share. Volume is huge, it's smashing through resistance levels. I mean everything, and I mean everything on the surface was screaming buy. It looked like a perfect, can't-miss entry point.
But here's the twist. This trade wasn't being watched by a human, with all the baggage that comes with that. Greed, fear, you name it. No. This was being analyzed by a multi-layered AI system, one designed specifically to replace all those messy gut feelings and emotions with pure, cold mathematics.
And look, this isn't just one single bot running a program. You got to think of it more like an entire orchestra of 6 distinct AI engines, and each one has its own highly specialized job. You've got one analyzing market sentiment, another one hunting for the perfect strike price. They all work together in concert to build a complete, totally unbiased picture of what's really going on.
Okay, so to really get why it made the decision it did, we have to understand how this thing sees the market. Because let me tell you, it's not just looking at a single stock chart the way you and I might. It uses 3 core concepts that give it a completely different perspective. First things first, it figures out the overall market regime. The best way to think about this is like a weather report for the entire market. It looks at big players like Bitcoin, the S&P 500, and volatility, and then it decides, okay, are we in a bull market, a bear market, or is it just neutral? And what's so crucial is that it flat out refuses to trade a single stock until it understands the health of the entire ecosystem. Second, it goes on a hunt for something called convexity. Now, that sounds technical, but it's really just the sweet spot of a trade, the point of maximum leverage. See, the AI isn't just asking, hey, will this stock go up? It's using math to calculate the exact price zone where even a tiny move could create a huge, outsized, explosive gain. It's looking for the perfect launchpad.
And this one, well, this is maybe the most important concept of all, fragility. What the system does is it identifies a critical price level in a key asset, in our case, Bitcoin, that basically acts as a secret tripwire. If that specific price level breaks, it's a massive warning sign of hidden systemic danger, even if a stock like Tesla looks amazing on the surface.
All right, so we've got the concepts down. Market regime, convexity, fragility. Now for the main event. How did the system actually use all this to analyze that Tesla trade that looked so good? This is where it all comes together. And this, right here, just lays it all out perfectly. On the left, you've got what a human trader sees, the FOMO, the excitement, the can't-miss trade. But on the right, that's the AI's reality check, and it is a completely different story. It saw zero confirmation from its key indicators, Bitcoin and the S&P 500. It noticed that options were getting weirdly expensive, which is a subtle red flag. And it spotted a dangerous divergence between assets that should be moving together. It was a whole web of warning signs.
So after it crunched all this hidden data, the final calculation, wow. The system came up with a staggering 70% probability that this beautiful-looking breakout was actually a bull trap. A trap designed specifically to suck in emotional buyers right before pulling the rug out from under them.
So what was the final nail in the coffin? The one thing that sealed the deal? It all came down to Bitcoin. The AI uses Bitcoin as its ultimate gatekeeper, the final green light before taking on risk. And Bitcoin had failed to break its own critical confirmation level by a measly $115.
Think about that. A tiny, tiny gap of just $115 on an asset worth over 6 figures. That was the deciding factor. By enforcing its discipline over that tiny gap, the AI hit the veto button on the trade, and in doing so, it prevented what would have likely been a 40% loss.
Okay, but the story isn't over, not even close. Because after skillfully dodging that bullet, the AI's sensors started picking up something else. A massive, violent shift
happening in the market's underlying structure.
All right, remember that tripwire we talked about? Well, here's where it gets triggered. At the end of the day, a key market indicator, the Bitcoin ETF, closed at $49.07. Now, that number might not look like much on its own, but to the AI, it was absolutely everything.
Why? Because that price was critically below its pre-calculated fragility trigger of $50.40. That was the line in the sand. The AI had been watching that level all day long, and it finally broke. It just punched right through the floor.
And that was it. The tripwire was hit. The market's hidden weakness, the very thing the AI was watching out for when it vetoed that Tesla trade, was now completely out in the open.
The system's reaction? It was instantaneous. Its entire posture just flipped. It went from playing defense, patiently waiting, to going on a full-blown, offensive, bearish attack. And this gives us a peek at the new battle plan. The AI is no longer looking for upside. It has now generated a tactical battlefield map, this strike ladder, with incredibly precise downside targets for Tesla, the S&P, and Bitcoin. It's even identified what it calls kill switch zones, where the selling could get really intense. The entire game just flipped on its head.
So what are we supposed to take away from all this? I mean, what does this whole high-stakes decision really tell us at the end of the day?
Well, what we're really looking at here is something much bigger than just a trading strategy. It's like a whole new architecture for making decisions. It's a system built to do one thing: replace human emotion with mathematical discipline. It uses a wide-angle lens to see the whole picture, and it always prioritizes protecting your capital over just chasing a quick gain. It's about turning a gamble into a systematic process. And that kind of leaves us with this big, fascinating question to chew on, right? As these AI systems get better and better at protecting us from our own worst impulses, our greed, our fear, our FOMO, who is really in the driver's seat? When a machine's discipline consistently outperforms our human emotions, what does that mean for the future of high-stakes decisions? Not just in trading, but everywhere.